afternoon, guys, and welcome back to my YouTube channel. Welcome back to my YouTube channel. I trust we all are very well and we're having a wonderful afternoon. So, as mentioned, that I will be analyzing again from 2 o'clock. So, this is just 3 minutes to two. So, let's get into the chat. Let's get into the chat. Let's get into the chat. So, on the 4 hours candle, we have obviously closed. No, we haven't closed below this point, but we've broken it already. The mid level of this from our last video. If you check our last video, you'll see where we stopped at. So this candle here just closed right above it, and then this one that opened immediately swept it. And not just that, we are below the daily candlestick we are looking out for. At the end of the day, we want to see how the candle close below this highlighted zone. That's it. Yeah. So welcome back. But before I proceed, let's um let's learn a few things. Let's learn a few things from our last videos. Let's learn a few things. For those who are new to Forex, first of this video is educational. You shouldn't be taking any trade just based on the fact that you see it off someone's chart or something like that. You're meant to like take your due diligence, study, understand how price move, understand how you interpret it for yourself. There's no um there's no one way to things, there's no one way to trading, right? There is only one thing you must learn to do. You must learn to manage your risk, which is very, very important. As much as you must learn to trade, your risk management determines how long you stay in the trading environment, right? Your risk management determines how long you stay in the trading environment. So yeah, a lot of people preach the risk management got they preach the risk management topic, but uh, there are sometimes that even those who preach it, they actually break that rule themselves, right? These are times where maybe we want to make a certain amount of money, we've set a certain target for ourselves, and then we've set like a time limit, right? That's when you see people trade erratically. They trade erratically, and sometimes when you have a set target, you tend to forget your rules and regulation. I said rules and regulation. You tend to forget your set rules. You tend to forget your set rules, and that's trading for you. It's an environment that gives you the advantage to do anything you want at any time you want, right? Behind the consequences and then behind the reward yourself. So in that type of situation, we human, we tend to like overuse the privilege. We tend to overuse the privilege. So yeah, what are we looking at now? What are we looking at now? So presently, gold is testing this week. Yes, but this particular week for this candle, God is testing this particular week for this candle. Yeah, God is testing this particular week for this candle. I apologize for any background noise that might have come in place. So, let's see what we have. Let's see what we have. I don't know. I think the noise, or I reduced the decibel on my distance. So I don't know if you were hearing me before, but basically I hope you're able to hear me very well. I was just trying as much as possible not to capture the background noise from the environment. Yeah, I was trying as much as possible not to capture the background noise from the environment. So that's basically it. So we're looking at this candles week here. I'm looking at how markets act from its 50 from the 50% of the week. We are looking at how markets act from the 50% of the week. I would need to reduce this a bit. Yes, I think it's okay like that. I don't want background noises to come in. Yeah, I don't want background noises to come in. That's just it. That's what I'm trying to prevent. But anyways, so we're looking at how market behavior. So what do we see? The market actually wick down, coming to this point. The market wick down, coming to this point here, but we didn't test it. We quickly retrace back into this above the 50% level, and now a new 4 hour candlestick just started. A new 4 hour candlestick just started. We've closed decisively. We've violated this one. Now this is the point we are at. This is the point we are at. Though, do we want to place any trade per se from here? No, not really, not really, not really. But let's go back to where we're coming from. We go to the 1 hour time frame and see how the market has like how the market has behaved from the 1 hour time frame perspective. Do we have a week? Yeah, we have a week here also actually. Okay, but we leave the 4 hours. We leave the 4 hours. They tend to like give us some very good perspective and help us in taking drastic decision, right? So at this point, I might say that we've no, I won't call the low yet. It's not a low actually. So what you are waiting for now is a retracement. Is a retracement, right? We are not trading the retracement per se, but what you're waiting for now is a retracement. In our last video, we were trading around this range. In our last video, we were trading around this range. Yeah. In our last video, we were trading around this range, just shy of from this point in our last video. So um, like I said, I was expecting a retracement back to this zone to be able to join the downtrend, but we didn't get that. So I leave in the market at reverse up to this point. I would have possibly placed a sell position, but we didn't get that. We didn't get that. So that wasn't given to us. That wasn't given to us. But now let's see. Let's see. Now everything I'm going to be doing is going to be more structurally biased, more structurally biased. It says more structurally oriented. Everything I'm going to be doing now is more structurally oriented. So you're going to be following the market structure going forward now. Following the market structure going forward now. You all would agree with me that we have a decisive movement happen from this point to this point, right? A decisive movement happen from this point to this point. So this particular point is a decision-making point for the market. We want to look at the market possibly. I need to take off this. So I need to take that off. Let me go back to flowers because I don't want too much of colors and stuff like that. So I'm going to take that off and just label it correctly, and that'll be it. So let me see. Okay, so we have the closing 4621005, and then we have the low 4552.84553.85. Okay, so the midpoint is what you are looking at now. We're looking at how the market should behave from the 4 hours perspective. From the 4 hours perspective, how the market would behave from the 4 hours perspective. Um, so uh, you're looking at a 4 reaction. Looking at the 4 hour, so this is like a 4 hour week, 50% level, right? So that's what it is. This is a 4 hour week, 50% level. So what is just going to help us do is going to help us take off this point, right? So we're going to look at how market reacts from here. If you can see, this was it before. When market got here, market was unable to like close below it, so they made a decision and continue higher. But right now, the sellers are in utmost control. From here, we are dropping we are dropping actually, we are dropping. But yeah, we are dropping. But personally, hoping for a retracement to hopefully join the sell. If the sell is still valid, hopefully join the sell if the sell is still valid. And then yeah, that will be it for me. That will be it for me. So this was the previous one. This is the one we are trading at now. Is there any other week? We have this, but not decisive. So it's still relative. It's still relative. So we want to see the market come down to this point. We want to see the market come down to this point. So it's just how we join the trade. How we join the trade. That's what matters now. How we join the trade. That's what matters now. How we join the trade. That's what matters now. That's what matters now. So basically, um, we might. I would use the word we might. So okay, let's do this way. No, I don't want this to be elongated. Okay, so we have this right here. There's something I'm driving at. There's something I'm driving at. Just a way for us to start trading. There's something I'm driving at. So looking at the immediate structure the market is giving us. So one thing we've seen is, first off, we had an FVG right here, this particular FVG from this downtrend, from this down movement of market. We have an FVG right here. So market has closed above it. Market has closed above it. Market has closed above it decisively, above the 50% level one. Market has closed above the 50% level one, but market has not closed outside of the FVG gap. Market has not closed outside of the FVG gap. So if anything that makes the market close outside of the FVG gap, one, that's first thing, market close outside of the FVG gap. Second thing, market clears this this swing low, or this swing, I don't know how they term it, right? Market clears this high point right here, this point where decision was made. Market clears this point where decision was made, this here, right here. The market point clears this point, then we start seeing like a um structural reversal, structural reversal. So if we can get that, if we can get that, although it does not look as if we'll be getting that, it does not look as if we'll be getting that, because we are unable to close outside of this FVG. We are unable to close outside of this FVG right here. We are unable to close outside of it. Yeah, we are unable to close outside of it. So that's what you are looking at now. So if we can close outside of it, then we can possibly say, okay, we are continuing, we are like reversing. We can't get that right now. We can't get that right now. Can't get that right now. Let me show you. I think the same thing plays here. The same exact stuff plays out here, right? So we are at this point, we're making a decision, then we just tap into this 50% encroachment, and then the market continued lower. So that was what happened. That's why we didn't come to this point, neither did we even bother coming to this point, right? For here, there was no way we could be making a decision. But we could have placed a sell from here, and then before you know it, it takes us out. But the risk to reward would have been minimal actually, because the reward is basically we're expecting the market to come down to this point. So anyway, we are placing a trade from now, was when the market to come down to that point. So the risk reward would have been good. It would have been good, but we don't just want to be placing trade randomly. That is just it. We want a structural trade. We want the market to give us a structural trade. So that's that on gold right now. Am I still looking for a more in-depth reversal? Possibly, possibly. We are at this point, and then decision is going to be made at this point whether the market is reversing or not, or it's going to continue lower. We're here before decision, it came to a point whereby you have to make a decision. The market decided and it continued lower. Now we are at a similar point right now. So the market is deciding. Market is deciding. Yeah. So that's basically what the market does. It moves somewhat from price point to another price point. Get to a point where it has to make a decision. It makes the decision, then it continues lower. Yeah. So that's what the market does. Timing, timeout. And so let's go to the next one. I would let's go to BTC. So yeah, you could recall we're expecting BTC to do something, but it didn't do it actually. It didn't do it. But it hasn't moved much. BTC hasn't moved much. So we know that BTC is most likely coming back down to this point. But let me show you what I mean by that. From the forward perspective, there's no FVG that is restricting the market, right? Then from the 1 hour, yeah, we have an FVG. We have this FVG right here. Of this FVG right here that can serve as a point where market could reverse from. Market could reverse from. But yeah, market could reverse from. I think um, I would I'd most likely go back to look at the market structure from a higher time frame back down. But one thing is, I don't want to like be trying to like try and disturb myself in getting the scope, the overall scope, right? I don't want to do that. I don't want to do that. Like try to get the overall scope of the market, right? What I just want to do is don't like make the information that the market is giving us immediately. That's what I want to be trading. Like they are past information, right? They are past information. We shouldn't be blind to those past information, but we have to ensure that we are not too rigid on ourselves, right? We're not too rigid on ourselves. We are not too rigid on ourselves. We're not too rigid on ourselves. We're not too rigid. In one way, my trading style is still somewhat rigid, and I'm going to explain that in a few minutes. Let me capture this correctly. 663. Okay, and this is 76246. So okay, so this is like a very good let me say 76246. Sometimes when you analyze this way, you just see it's as if it's not touching it. Okay, all right, so this is the point you are at now. The market is coming into that particular resistance, like this. It's coming right here. It's coming right here. It's coming right here. It's coming right here. And that's okay. It's okay. The market is selling right now. It's selling right now. The retracement we're expecting, we didn't get it, and we might not be getting it for some reason. Might not be getting it for some reason because market has given us another structural high. Let me take this off and show you properly. Market has given us another structural high. Let me see if I can capture that correctly. Yes. So we're expecting the market to retrace into this point for us to be able to place a trade, expecting the inverted FVG to be the FVG to be revalidated as an inverted FVG. It does not always have to happen that way. And then we had like this huge FVG, but we didn't want to utilize it because it's too big, right? So we went down we went down in our timeline. Going down our timeline, we have an FVG here, it has been violated already, and then we have another FVG right here, right? So those FVGs are what matters to us. But at this point in time, okay, at this point in time, I'm going to still come back here and modify this FVG. It's going to help us with some decisions right now. I'm going to show you this. So um this particular price movement, this downward price movement, as its low at this point, as its low at this point. Yes, so that's where the price movement low is at, right? Now, the point where we decisively closed below it was from this high. This was the highest high between these two lows. This is the highest high between these two lows, right? So that's where we just want to read it. This one we breached it here, but we didn't close below it. So yeah, so we cannot say, oh, we formed a new low, then we came back here. We can't do that. So this the point you are still looking at as our relative high for this downtrend. This is the point you are still looking at now as a relative high. So anything that makes us break this particular point, that's when we start looking at, oh, I think the market is trying to change its trend, or it's trying to test a higher resistance and all of those type of things. So that's just it. And now let's see what you have. We've been capturing the 15-minute FVG for some period now. We've been capturing the 15-minute FVG. If we do the same thing right here, that will give us this, and this will give us this. So let me just ensure we do it correctly. We are doing it correctly. Okay, this will be 75885. And this will be 76111. Okay, so we've captured that now. All right, all right, all right, all right. That's cool. That's cool. So we've decisively closed below it in one way. We've decisively closed below it in one way, and the close was just round about here, right? This was the close. This was the close. This was the close. We closed below it. The close was right about here. We made a retracement. retracement was quickly neutralized by this AVG that we have here. We have an AVG here, so it neutralized this. It neutralized this, right? And from here, from here, let me see. I don't have much structural bias because what I'm just trying to do is just to okay possible retracement into this 50% encroachment, and would have just have like a nice trade opportunity, and that would have just been it for today up to that midpoint, right? Possibly, yeah. But we don't have much here. We don't have much here right now. We don't have much here right now. We don't have much here right now. We don't have much here. Anything that causes the market to start retracing, right? Anything that causes the market to start retracing. This particular trend is this downtrend now is showing participation of what's it called? It's showing participation of buyers. As we came here, buyers came in, right? Buyers came in. But the sellers have what? They've always come out to overcome. They've always come out to overcome. So I'm still looking at the possibility of, oh, is this sell going to be extended further or not? But let's do this. Let's do this. Let's analyze the market. Let's do it. Let's change the structure of our analysis. You see, we've moved from this point to this point. Market came down to this point and then went back up, tested that particular high, shy of it, and jump from there and dump from there. So one thing we can do to make our analysis easy of is okay, let's try and look at possibly break the market into quartiles, right? Break it into quartiles. So and see where we are trading at. Break it into quartiles and see where we are trading at. Okay, all right. So breaking the market into quartiles and see where you are trading at. That's another thing you can always do for yourself. That's a wonderful thing to do actually, and it gives your trade some it gives your trade some wonderful explanation, some wonderful ideology, and you yourself will even be happy about it at the end of the day. You yourself will be happy about it at the end of the day. That's the honest truth. That's the honest truth. All right. So breaking our trade in that manner, which I just said we are presently trading within 0.75 and 0.625, right? So market will be moving from one quarter to another or something like that in that manner. So market would move, market would retrace. It's just for us to look at, be able to identify the point you are trading at, identify the zone we are trading at, and yeah, identify the point you are trading at, identify the zone you are trading at, and know whether I want to take decisions or not. And it even helps us to break down premium levels and all of those type of things. But basically, it's just a way to give structure to the market, break the market into level. It might make it appear somewhat like, oh, too too crowded, or not. But it just helps your chart. It helps your chart a lot. It helps your chart a lot. So we've retraced quite a bit now. We are around the 75% of the retracement, right? From the overall extension from the last 5 weeks, Bitcoin had like retraced for about 75% of that extension, like from this price up to this, right? So we've like the whole of this extension, if we claim this all of this extension 100%, so we retrace by that amount. We retrace by that amount. So yeah, and let's see. Want to want to continue with the trend. Want to continue with the trend, and continuing with the trend is going to be somewhat okay. Continue with the trend, trading, trading. All right. Okay. here. How's the leg? Okay. So let me take off that. Let me take this off. It's not. I'm not utilizing it here for now. I'm not utilizing it here for now. Not on Bitcoin for now. You would find its implementation in other places. Although you see the way. Let me show you something. You see the way sometimes, not even sometimes, you see markets when they come to this point, it acts as, yeah, it's acting as support. Yeah, it acted as support, right? You can see it does, like, it acts as paddings for the market as food and all of those things. So market moves in that way. Market is, it's it obeys, movement, it obeys percentages. Like, it doesn't just go when it comes to a point. Oh, like everyone, we are looking at this thing globally, we are looking at the numbers. People are trading, they are saying, oh, this thing has fallen by this percentage. Oh, I think it's overextended. I think we want to, as buyers now, we want to place our trade now, or something like that. So that's the way you should read the market. Look at the market and try to understand the price movement, right? Try to interpret the price, try to define your risks, define your profits, and then don't be afraid to place your trades. Don't be afraid to place your trades. In as much you've defined your risk, if you accept the fact that, oh, this trading, I can make loss or I can make profit, and if I'm making loss, I've defined my loss, I've accepted that this is the amount I'm to lose, and that's it. That's it. That's it. So I've tried not to go to the lower time frame because at this point I'm out right now. I am not um with enough, how will I put it? I'm not I'm not in emotionally I'm not emotionally grounded enough to go to the lower time frame than 50%, 15%. Yeah, because I'll be seeing multiple opportunities and then I want to be jumping on it off, right? So until I get that utmost feel from that particular time frame, that's when I go there. Or sometimes when I go there, maybe every just led me there, right? So that's it. There's nothing like a solid concrete trading system. It's just opening the chart, look at where we are at, and then interpreting it as you would like to. So this was an opportunity to sell. We didn't see this until I started analyzing. This had played out already, right? Cool. But these ones, we marked them out before price even got there. I believe so. I believe we did that before price got there. We modified. We marked out multiple points before price got there. And then price came in, price tested it and all. And price reversed. The reversal didn't give us an opportunity to enter a trade, right? The reversal didn't give us an opportunity to enter a trade or something like that. And that's okay. That's normal. That's trading for you. Right now, what I'm looking at is there is there like an opportunity to enter a sell at a more suitable risk to reward ratio right now? At a more suitable risk to reward ratio right now. So right now we have like a lot of levels that can take the market, back. Like a lot of them. Not lots. I wouldn't say lot actually, that's a wrong use of word. Sorry. We have like three averages. You have like three averages. You have like three concrete averages on Bitcoin. You have like three concrete averages on Bitcoin. We have like three concrete averages on Bitcoin. And yeah, you have like three of them on Bitcoin right now. And they can go on to do anything. Can go on to do anything. You can do and undo. So you can go on to do anything. You can go on to do anything. One thing I'm still looking at is something, and I haven't mentioned it, is terming this point here. Actually, we can, but it's going to, like, it's going to, how do I put it? It's going to be somehow, it's going to make us to want to look at the market as something that, oh, we've broken trend immediately and all of those type of things. That's why I wouldn't want us to view this point right here as the market high. If we view it as the market recent high, it is very okay. It is very okay. Um, if you are viewing it as the market recent high, then it means this will be the market recent low, which it is, because if you follow the rule 1, 2, 3, 4, 5, right, the market opened here, formed the high here, and then now we are going downwards, right? If we count it again, 1, 2, 3, this was the last low. It was the last low, so we've closed below it, we've reached that particular low. So if you are trading the market recent trend, and then so you have to trust your analysis. You have to trust your analysis, and then when you are interpreting the chart, you have to like what you are looking at immediately. Sometimes like little information might be misinformation. That's why I'm skeptical. Sometimes little information might be misinformation. So we have the support right here that is holding the market, right? That's one thing. So in my personal view, this market would continue lower so far that we maintain, we don't close above this 50% encroachment. So far that we don't close above this 50% encroachment, this particular market will continue to go lower. We might try to come and test it. We might try to come and test it, this particular 50%. We might try to come and test it, okay? But in as much that we don't close above it, the 50%, in as much that we don't close above it, in as much that we don't close above the like this particular FVG from this point to this point, in as much that we don't close above it, or better still, if you want to like okay, make the FVG clear, like the closing price of this. So let's see what the market will do of this from this point to the closing price of this, right? So if the market come here now, let's see what it will do. Okay, this is reacting to it, it wicked it. So that is going to let you know, oh, do we want to continue lower? Do we have a good reason to place a trade and all of those things? But anything that makes us close above it, anything that makes us close above it, the market can quickly just give us a sharp retracement. Anything that makes us close above it, market can quickly give us a sharp retracement. So let's see how the market closes. So okay, this particular candle closed below it, this one closed below it, right? This one closed below it. So let's see how this one would close. Let's see how this one is going to close. So what decision are we trying to make? What decision are we trying to make? We are trying to see if there's a possible reversal. That's what I can tell you. You're trying to see if there's a possible reversal. You're trying to see if there's a possible reversal. You're trying to see if there's a possible reversal. That's what you are trying to look at for now. If there's a possible reversal. If there's a possible reversal. So if we close above it one, we clear this point two, then if we have like a structural build up, not that we just close above it, then we place a buy. No, we have to close above it one, have a structural build up, and then that's what we try. That's when we start saying, oh, we might be retracing. We might be retracing. And then if we are retracing, the only FVG that I would comfortably want to trade now is this. That's the point I would comfortably want to sell from. That's the point I would comfortably want to sell from. We have this one. We have this one right here. We have this one right here. We have this one right here. This particular FVG right here. Let me take this off for now. All right, that's out of it. Okay, I think we have like okay, we can take this one off also. That's out of it for now. That's out of it for now. So we understand everything you are saying. We understand everything you are saying. We understand everything you are saying. Okay, that's it. See, we we are unable to close decisively above the 50% of this. If we start closing above the 50% of this, we would see a retracement. We would most likely see a retracement. Anything that makes us close above the 50% of this, we would see a retracement. And that's just it. That's just it. That's just it. So let me set a alarm right here. That's it. I've set the alarm already. Oh, I've reached the alarm limit, I believe. I think I have alarms on other pairs. I don't know. You have alarm on other pair. Okay. Okay, that's Bitcoin right now actually. That's Bitcoin right now actually. I might analyze it for a while longer so as to see whether we might take a this yeah, we might place a trade. Yeah. So let's check gold again. Let's check gold again. Okay. So we are still on good. 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 So don't forget that particular 4 hour candle that closed above it. So for I think now this is like a point to make a decision. This is a point to make a decision on all of those things. So yeah, and our entry for good now. Our entry for good now. Our entry for good now. Unlike before, this was our previous entry. This was our previous entry. That was our previous entry. So yeah. So now this point would spiral within this point to make a decision and all of those things. So here also the same thing is happening here. We are trying to see if we close above the 50% of this. If we anything that makes us close above the 50% of this, yes, yeah, the market is going to us break this particular one here, give us a possible structural point of a reversal, and then possibly we might trade it into the next point we are looking at, the next point of conference you are looking at. But that's by the way. That's by the way. That's by the way. And now to GU. To GU. Okay. So G is on a retracement right now. G is on a retracement right now. Right. G is on a retracement right now. Okay. G is on a retracement right now. But um one thing is we had we had analyzed it before, right? We had analyzed it before. We had analyzed it before. I believe I believe what GBP USD might do. I believe what GBP USD might do is we had this gap from the last 2 weeks. We had this particular gap also. We had this particular gap for this. I, the way the market has been moving these days. We had this particular gap also last 3 weeks. These last 3 weeks. Wow. These last 3 weeks. This last week coming into last week. Oh, these last 2 weeks. This last week, and then we're in this week right now. This week. No, 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 no. This last week, all of last week. This week, but we are doing this week now, right? Okay. So um, we are looking to sell from the analysis I did earlier on. We are looking to sell. We're looking to sell. We're looking to sell. We're looking to sell. From the analysis I did earlier on, we are looking to sell, and we have defined the entry point. Now we are retracing already. We are retracing already right now, which is a good thing. Which is a good thing. Are you going to sell the market up to this point? Right. That's the agenda. That was the set goal. Looking to sell the market up to that point. So now we are retracing. So possibly we are able to like place that particular position and see how it plays out. So the entry is going to be right here, and then the stop loss is going to be right here. it's in two ways also. It's in two ways. You could recall I said that, oh, when we were here, when we were at this point, I said, oh, if you go and play the video, go and play the video. We've closed below this, right? When we close below this on that 15 minutes time frame, I said, like, one could place a trade here. If you look at it, one could place a trade here and then it didn't just dump for for profit or something. So it went for about 46 pips or so. So on about 46 pips, and that could have been it for some people. That's all they need in a day. I just said, okay, the reason I'm not placing the trade is because it's not like the structure I trade. I don't just trade because, oh, we break. No, it's not the type of structure I trade. I don't trade that type of structures. That's not the type of structure I trade. So that's the major reason I didn't place that particular trade. That's the major reason I didn't place that particular trade. That's the major reason I didn't place that particular trade. And yes, so our sell buyers. For now, I'm not doing much of like analysis into, okay, it's what I'm talking about here now. So look at this. We are trying to close decisively above this already. Like we've broken it right now. We've broken it right now. So this year is giving us a good like good buyer are coming in. So that's just it. That's just it. So we look at how this candle closes, then we look at how we break this particular AVG. We're able to break this particular AVG, right? So that's just what you're looking at now. That's what you're looking at now. Let me delete some of this so we are not tempted to want to go look at it. I was thinking of looking at UJ. I was thinking of looking at UJ because I saw these structures and all. I saw the structures and all. But let me delete everything. Okay. From the 1 hour perspective, you can see it's just market has been this trading this year. Yes, sometimes we have wonderful moves and then it goes into that consolidation, then it goes again, or it consolidates, it drops, it goes up, consolidate for a while, it drops, consolidate, drops, goes higher, gap higher, and all of those things. So trading this period of time, it really requires you to be patient. It requires you to know what you are doing, and then it requires you to like always learn to set your stop loss. Always learn to set your stop loss. That's just it. Trading this period of time requires you to learn to set your stop loss. Because what's the benefit of trading if you are not limiting the amount you can lose? Yeah, sometimes we take profit partially, but we don't learn to cut our stop losses. We don't learn to cut our losses actually. We don't learn to cut our losses short. But we exit winning trades quicker than we exit losing trades. We have the opinion that, oh, it will still go in my direction, but your account is in the red. And when our account is in the blue, when we are in profit, rather than, oh, okay, can I micromanage this or should I take partials? Instead, we just take everything and then at the end of the day, we are like, oh, I could have stayed in for a longer period of time and make more profit and all of those type of things. I could have. So all of those things are what as traders, like that's the reason we have to be getting it better. That's one of the reasons we have to be getting better. All of the I could have that you're identifying in your trades, there are gaps, right? There are gaps that you need to deal with, and you need to deal with them intentionally as a trader. All this I could have, there are gaps, and you need to deal with them intentionally, with full intentionality. You need to deal with them with full intentionality, or the I could have. So that's one thing. That's one thing I can say. That's one thing I can say for you as a trader. You need to deal with those I could have. I could have done this. I could have done that. I could have traded this way. I could have traded that way. Identify them. When you are saying it, jot it down. Jot it down. Then when you're not trading next time, ensure that you are doing all of those things, right? As I'm saying this to anyone who is listening, I'm saying it to myself also. ensure that you are now okay. All this I could have, now I am doing it. Oh, I could have I could have stayed longer in the trade. When you're in a winning trade, stay longer in it. When you're in a winning trade, take partial. You don't need to break even all the time. You can take partial. You can take partial. You can adjust your stop loss to lock in some profit. And in as much that you don't have to like take the whole bag also. You don't have to take all the bags actually. You don't have to take all the bags. If you are in one particular amount and you know that on a normal day, or you don't make this amount, say you make $50 on a normal trade, and then you're in a trade, a single trade, and you're already making like roughly $300 already. Sometimes you can take it and just exit the market, right? Or better still, you can take 200. You can like lock in 200 and leave the 100 in for the market to decide whether it wants to keep going or not. So if the market retraces and takes you out at 200, that's a profit. And if it continues, you just keep what locking in more profit, locking in more profit. And before you know it, you're making like good progress as a forex trader. You're making good progress, and yeah, you are on your way to living the dream of that's just the honest truth. I am on my way also of living the dream. So yeah, like I said in one of my videos, the brokers give the best advice, but by God's grace, I'm not broke. Yeah. So we are taking the decision, like I said, if we close decisively above that 50% encroachment, above this 50%, then we might be seeing the market like make a reversal back up. So we are trading what you are seeing, and we are structurally getting out of trades. Not structurally getting out of trades. Structurally getting out of trade. For example, this point and this point, they are like they deem to be like strong, those 2 points, because like this like this was the market previous low relative to this midpoint of this FVG. They deem to be strong, right? They deem to be strong. And that's just the honest truth. They deem to be strong. So before you can place a buy trade, you have to like look for structural move, decisive move. The market break a high, it made a low, and the low was like a very decisive turn at the turning point of that low was at a very decisive point, and it continues higher and all of those type of things. So now we've closed above the 50%, like I've been saying. So what would most likely happen? What is going to happen is market is going to continue higher, right? Not higher for a long period of time, right? I can't say yet. I can't say that just yet. But from this one that just happened now, I can decisively say that, oh, this market is going to clear this high. Obviously, from what just happened, I can say that this market is going to clear this high because if it goes above this one, so this market is going to clear this high. And based on that perspective, I wouldn't trade it. I wouldn't trade it. It's just something I can, okay, say we are doing a paper trading or a demo trading. You come in, you place a trade. Let's see whether we're going to take stop loss on this trade. Your risk is at this point, right? Your risk is at this point. You place your trade just here. And say, for example, you target this. Okay, this to this is still one to one, right? This is one to one risk reward, right? But say you target, like I said, the next point of reversal, if you are looking to sell, is going to be right about here. Okay, so you target that point for sell position. So you place your trade on closing that 50%, and you're targeting that point. So let's see how it will go, or how it would have gone. So you're capturing it live. I'm not placing the trade. Take note of that. I'm not placing the trade. If I'm going to place a trade, I'm going to say it. But if I'm placing a trade also, that does not mean that anyone should place the trade, right? I'm placing a trade. You don't know whether I'm placing it on the demo account or something. You don't know. You don't know. So that's just the honest truth. So let's see how the market goes from here. So we've closed above the 50% decisively. Let's see how the market goes from here. All right. So we can go back to GU. That's the one particular trade I'm looking forward to, this particular GU. is the one trade I'm looking forward to. I'm looking forward to it. We have we have a decision to make. We have a decision to make for GU. We have a decision to make. Okay, we have a decision to make for GU. Actually, we have a decision to make. And I think actually USD, let's say USD. Like I said, like almost a similar behavior that we saw in that particular end. Same thing is going to be playing out here right now. Although for this one, I haven't yet the with let me see 4 hours. Okay, they're going to this one is going to be based off a 4 hours decision of a candle, right? 4 hours decision. If a 4 hour candle closes below it, then it's going to continue lower, right? It's going to continue lower. This one is going to determine what happens tomorrow. So if we close below this, then tomorrow we would most likely continue lower. You understand that viewpoint? Would most likely continue lower, and that would better help us to trade into this zone. That was just it. That would better help us to trade into this zone. Just spiral into that zone. So that's just the trade idea. And let's see. So we are waiting for this one to retrace, and for this one 15 minutes. We are checking out a possibility with say we are demo trading. Say we are demo trading. Say we are demo trading. Let's say we are demo trading. This is one of the reasons I say uh I wouldn't trade it. Say we are demo trading. So we place a trade on this, like place a trade on this. Once we close decisively above this, we close a trade right here. But we still have this, right? Now, since we've closed above this 50%, we expect it to still act as support, right? We expect it to act as support. That's just what I'm thinking. That's my thought. That's my interpretation from what I've learned, right? That's my interpretation from what I've learned, and then I've come to understand from what I've learned, and I've come to understand. So let's see how it's going to go from here. Let's see how it's going to go from here. All right. Let me delete all of these triggers. Triggered. I use it a lot. I use it a lot. Delete this trigger. Delete. I might need that bit SAUSD trigger that I just deleted. But right now I think GU is the most GU is the most crucial one for me right now. GU is the most crucial one for me right now. So I think at this point, I've showed up already. There's almost 50 something minutes of recording. 50 something minutes of recording. I'm not going to delete this particular. I'm not going to delete anything. I'm not going to be deleting anything. It's going to be uploaded so we can follow and we can learn. But I place a trade on my demo account. Yeah, I don't see anything like right now. I don't have any live account to place any trade on. But if I place a trade on my prop firm, on the prop account that I'm trading, if I place a trade on it, I'll obviously let you know. And just to let you know, not to let you know that you should place same trade or you should try and place a trade in that direction. No, it's just to let you know that, oh, this is the idea, this is the interpretation. So as you watch me over time, possibly you will get an understanding, you get a grasp, and then like you will form your own understanding, you form your own understanding, you form your own knowledge, you form your own interpretation, right? But one thing you learn most especially is to trust yourself, to trust yourself, to trust yourself. That's it. That's what is most important. That's what is most important. So on that note, I'll be ending today's stream. If you are viewing it at any point in time, I would like you to do one thing. It's the subscribe button. That's one thing I've not said. My two past videos, the last two videos I've made, I've not said that. It's the subscribe button. Please reshare and like, reshare and like, and then the comment is opened for anything you want to say. And note, I'm not reaching out to anyone for any collaboration or anything of any sort. I'm saying it right now. And then this video is fully for educational purpose. Fully for educational purpose. Don't take any decision based off what you are seeing. Don't take any decision based off what you're seeing. It's strictly educational. Strictly educational. Yes. So that is all. Do have a wonderful rest of your day, and God bless you. Yeah, God bless you.